The markets are pumping today on the back of employment data that could suggest that the Fed is done hiking rates. We'll be discussing that, Apple earnings, everything else going on in the markets, and more today on Money Never Sleeps. Welcome back, and thank you for joining us today. As we get going, do us a favor here. Hit that like button. If you have not yet, subscribe to the channel. Nothing that Kev, House, or I say is financial advice. Please do your own research before executing any buys or sells. Kevin, we have employment data today. Jobs added 150K below the 170,000 estimate and the 258,000 a month average over the last year. Unemployment rate slightly up at 3.9%. Average hourly earnings up 0.2% month over month and 4.1% year over year. So earnings continue to outpace the alleged inflation numbers that we get. The markets responded very favorably. We can see that the NASDAQ is up almost 2% today, about 1.5%. S&P 1.25%, Dow just under 1%. Tech is having a good day, all due to the fact that this is making markets even more confident that the Fed is winning this battle, is done raising rates. They're going to skip in December, maybe pivot middle of next year. How are you feeling about the latest economic data and how the markets are going to react moving forward?
Yeah, I think the reaction's kind of wild today. And apologies for any noise in the background. There's guys on John Deere's, which I'm going to short the company as soon as we're off this call. But yeah, this is it's pretty wild to see.
If people are using John Deere, why would you short it? Like, clearly, like, they're still selling lawnmowers. Like, that seems like the last thing you should do. Don't spite short it. That's a bad decision.
I don't know. Sometimes it works out, boys, especially with American Airlines so far. We're doing pretty well there. But yeah, this is, with the data that we got today, not necessarily the most. I mean, it looks good for the Fed, I guess, if you're looking at just the headline. There's a lot more underneath the surface that's really important. But the thing that's really gotten me kind of upset by this data and how the market's reacted is the fact that for the past 9 months, jobs added has been revised down. 9 months in a row, all this data has been revised to the downside. So there isn't as many jobs as people think. And while we're at 3.9% unemployment, I honestly believe that we're above 4% right now. I think that once we get these revisions and we start to see how bad it really is, then we're going to have a pretty good picture. But the markets are not reacting necessarily to the data that's being revised. It's only the headline and whatever comes out that month, that print, and then the markets are just, having at it. But for the bad news, nothing's coming up necessarily. And I was showing you guys something that was really important before the show. I think this is a really good chart, and I found it extremely interesting. This fucking lawnmower is right in my ear right now. But this is on the weekly close. They should be watching our show right now. But yeah, this chart is from Fred. So this is multiple job holders, primary job full-time plus secondary job part-time. We could see that back in 2020, it fell off a cliff, right? So obviously it's the pandemic. But we can see how much it's been rising going into 2023. So maybe there's, I think there was at one point, there was like 1 point something jobs for each individual out there. And they're trying to say that, the labor market's strong. Well, this is a chart that kind of proves that the labor market might be strong because people need more than one job, right, to survive. Inflation, Powell said in his speech on, Wednesday, that there's no signs of inflation rising. However, we got 3 readings in a row where inflation actually did rise. And so we're also seeing, people have multiple jobs here. So I think that this is a really good sign that we're seeing unemployment numbers that the Fed likes to say are, it's a strong labor market. I think this is, the contrary to that statement. So right now with 3.9% and everything that we're seeing, how the markets are reacting, I think that from the next revisions that we get, it's probably going to be a lot different than the numbers that we're celebrating today. So I'm not necessarily bullish or excited about the numbers we got. I think we're above 4%. And again, the more people that start getting laid off, the more that's going to affect spending, and that's going to affect, companies, which then they would have to lay off people. And then once again, it's just a cycle that goes back and forth to the point where the economy does slow to a halt. So I think that this is a pretty shitty data, if you ask me.
Well, I guess I did ask you, so thank you for sharing. That it is pretty shitty data.
You're
House,
welcome.
you have not been on the show this week. I want to kind of catch up with you, see what you've been doing here in the markets, anything that has really grabbed your attention.
I mean, honestly, it's just been like a lot of question marks for me. We started off the week and UVIX was going crazy. By the end of the week, it seemed like there's no volatility left, and that had completely died. So that's as far as TradFi. It's just a lot of uncertainty. Just looking at it from beginning of week to end of week. Crypto, I think the biggest thing that's caught my mind is the USDT and Bitfinex. What's going on over there? You had the UK really start cracking down, and a lot of banks sent out letters saying, we're really worried about this. We're going to stop, allowing you to transact in crypto and deposit into crypto. And they also put out some regulation, just, further cracking down on what you can and can't do. And then similar thing in Canada, Kraken, the exchange, sent out a letter to all of their customers via email that they're delisting USDT, I think DAI, Wrapped ETH, Wrapped Bitcoin, and a few others. So that's another thing, is just waiting to see. Kevin's been talking a lot about the fraud going on, some of the market manipulation stuff. And even the US government has started paying attention to it more. I believe it was Senator Loomis, who was actually in a Coinbase Twitter Spaces the other day. So I think, weeks and months to come, there's going to be some stuff coming out about that, and we'll get, more of an exact picture of how the at-large crypto market will be impacted. But for the most part, it's kind of same old the ETF, right? It's like, don't buy the rumor up until you've actually heard the news, because you don't know if stuff's been priced in. And the crypto market just seems very uncertain right now.
That it does. It is a weird time out here. Strange days indeed. We got some Apple earnings yesterday that the market did not love. Apple currently down 0.75%, which you might think, hey, it's not too bad. But when everything else in tech is up at least 1.5%, that is not a very good sign. So revenue, I believe, Kev, you said was down on the year, or year over year. Not what they are looking for right now. I wouldn't be surprised if that continues to happen, as we've seen disposable income becoming more and more tight to hold on to for a lot of people. So that's what we're looking at there. Next week, not a lot happening from an economic data standpoint. I talked about this yesterday a little bit, and I want to look back and see what the trend was on weeks like that, where we're coming off of a jobs report. We have a week coming up where, there's not much going on. There's going to be earnings, but not a whole lot going on economic data wise. And it's continued to kind of follow the momentum from the end of the previous week. So not financial advice, not telling anyone what to do. I do kind of get the feeling that if all else being equal, we would see a continued move up next week. However, there is so much going on in the world that is providing a lot of uncertainty that I think it's really, really tough to have a strong sense of what direction the markets are going to go week to week, day to day. We have, a lot of people are not holding positions overnight, right? We've seen that repeatedly. As people they're doing their day trades, but holding positions overnight, and God forbid over a weekend, is something that is not really happening. So I would expect we see that continue. Maybe we'll see some volatility in the last half hour of the trading day as people exit their long or short positions. If they're equally weighted, to the long and the short, maybe just nothing happens. But I don't think a lot of people are going to want to be holding risk through the weekend with everything going on. Kev, what are you seeing? When we look at liquidations and how people are positioned long or short, are you seeing any favor like to one side there? Not sure what I'm trying to say. The kid got me up early, man. We're struggling over here. We are struggling but surviving.
Don't worry, I got this. Man, this guy just came back, did a full
Christ, you like a jet engine?
We did a fucking donut on the John Deere and came back, dude. I'm pissed right now.
Did
They
you
used to
look
come
outside,
on
he's
Saturdays.
just like giving you the finger, like, yeah, fuck you and your YouTube show.
He's like, fuck you and your stupid friends and all your stupid shorts. Fucking
stupid internet money. God damn it.
I have no internet money right now, but fuck, man, this guy's loud as shit. All right, let's look at I'm going to pull up the long and shorts right now. I haven't actually looked at it in a while because I've been kind of staying away from crypto as much as I possibly can. I'm going to scream as loud as I can too, so that it doesn't sound like there's a fucking jet engine outside. Here we are. Let's look at the liquidations real quick, and we're going to look at the liquidation map for Bitcoin. So
funding
we can see
rates. Jesus Christ. I was like, what term am I looking for here? And it was funding
yeah.
rates.
Yeah, we'll look at those in a second too. But this is where liquidations kind of sit on the 7-day for Bitcoin across exchanges. We can see that, if we go all the way down to 30,000, there's 3.87 billion worth of liquidations. And if we go all the way over to 38,427, it's $249 billion worth of liquidations. We're kind of in the middle right now, and we're just kind of liquidating back and forth within this range between 34K and, I think that there's a good chance that we could push up one more time. I'm very satisfied with the wave 5 move that we saw with Bitcoin to the upside, almost hitting 36K. However, I do acknowledge that there's been so many stables that were, sent to Binance's exchange in the past 24 hours, even this morning. I can't even keep up with it. So I know that it's very possible that they could push it up, especially if there's low volume. If there's low volume on the exchanges, it's so easy to make this market move. So that's something I want to keep an eye on. And you can see probably up to, man, this guy's under my feet now, 36,370. That would be a pretty good level to liquidate. And that would be about $2 billion or so that they could go after. Let's look at the funding rates, though, because that's going to give us a pretty good idea of where people are positioned. And we can see motherfuckers are long. Look at that. I didn't even notice this. This is pretty insane. So all that red that you see there, that means that there are people who are going long on the market. So I wouldn't be surprised if for some of these alts, they do sell off a bit. Look at some of these. They're insane. We can see XRP is 0.01%, so that's more than 0.01, which would be positive/neutral. Solana is pretty, it's positive. No difference there. We can look at some of the other ones like the shitcoin TRB, which, is Binance, a liquid coin. That's negative 0.02, so there's probably going to be a squeeze there just because people are shorting it. Bitcoin, everything's positive, guys. There's nothing really too crazy going on here, and it's across all the exchanges. Now, sometimes you get a little bit of a, sometimes there's something in there in these charts and the funding rates that tells you that, the exchanges are doing something specifically on that exchange. I don't necessarily see that right now. About 2 weeks ago, I did see it with Binance, BNB. I think BNB was 0.07 or it was 0.1 or something like that at a given time. So that means that they were going max long on it on just Binance. No other exchange had that. And that's why we saw the price shoot up. So if you're going to be watching this, go on CoinGlass, look at the funding rates. Anything in red means that's extremely positive. People are going long. If it's in the green and negative, that means people are going short. If it's, flat at zero or, a little bit more positive, then it's kind of just like in a neutral phase. It's probably going to be consolidating sideways. But knowing that a lot of spot isn't necessarily still coming in to buy a lot of these assets, this is probably going to be more dangerous for a lot of perps and people who are going long in the market using, leverage and stuff like that. So that's what I'm seeing when it comes to a lot of the funding rates. And let's see what the long short ratio is right now. We can see that in the past 24 hours for Bitcoin, that for the most part, it is more so long. I would say, no, it's more so short. It's more short on this side, which means that there is, that potential possibility for a bit of a squeeze. Again, we know that since there is more shorts here, these exchanges, they're going to counter trade people. It's probably going to be likely that you see that push up a little bit. But again, it's within that range. I don't necessarily think it's going to be too drastic to the downside. I think there's a better chance of it going up a lot faster than it goes faster to the downside. So that's just what I'm seeing from CoinGlass's data right now.
Okay, interesting. Don't be squeezing other people's shorts. That's a way to make some enemies there. Your parents should have taught you better than that. What else? House, can you give us kind of like an update? There's so much bullshit on Twitter as far as like what's going on in the world. I just wait for you to tell me what to worry about, and then that's just what I do. So can you kind of give us an update on what you've been keeping an eye on globally, please?
Yeah, I've been a little more distant from world news. Had a busy week at work, but from what it seemed like the IDF had kind of encircled Gaza City. So Gaza City is more northern within the Gaza Strip. So it's one thing that a lot of people get confused when people are referring to Gaza in general. It's, well, is it the Strip or the city? But the IDF's kind of got them encircled. I know China and President Xi, he was saying he wants to start strengthening relations with a few different countries that seem pretty strange in conjunction. It was the US, Canada, Germany, but then also, who was it? North Korea, And there was one other country where it just seemed like, I don't think you're going to get good relations with all these people at the same time, publicly announcing, hey, we're going after people that are enemies, trying to strengthen those relationships. But it does kind of, at least in my mind, signal, China's recognizing some of the faults in their economy after, the Evergrande bankruptcy and some stuff like that. But overall, I mean, war's not, progressing any worse. It's not progressing any better post Yemen and the Houthi party getting involved. Other than that, honestly, the thing that piqued my attention the most was there was a dispute and a potential lawsuit going between Newcastle United and AC Milan, the European football clubs, over a transfer. But yeah, no, it didn't seem like there was any massive movement, other than the one thing that kind of escaped me until now is it does seem like the U.S. has been deploying more troops potentially for Iraq. There's been, kind of an uptick, and it doesn't look like the Iranian proxies in Iraq are going to be slowing down anytime soon. But to me, that doesn't signal Iranian intent to enter Israel. It more so seems like, hey, we're going to, piss off the U.S. and try and see what they do. And ultimately, who knows what the Ayatollah and the IRGC are up to. They're not exactly the most rational decision makers, judging by previous action.
Okay. Thank you for the update there. I appreciate it. Kevin, let's look at the weekly charts in TradFi. Anything that you want to discuss in particular there as we wrap up? And we got 40 minutes left in the trading week to close out the first week of November here. What has I'm seeing Netflix having a big day, NVIDIA, pump my bags, which I know that you're going to tell me we got all these gaps we got to fill. Go ahead and show me all the gaps that we have to fill and just crush my hopes and dreams that NVIDIA sends me to an early retirement.
Yeah, absolutely. Let's start with the NASDAQ, because look at this. This is absolutely insane how much of a green week we've had. Let's go to the 4-hourly just to show you guys. There's not been, there hasn't been a red 4-hourly candle this entire week for the NASDAQ. Isn't that insane? Same thing with the S&P.
That's
the Dow had
fucking wild.
It's fucking stupid is what it is. But again, you can't, underestimate these markets and doing shit like this. Again, right now, we're still holding this lower high. That's the thing that we want to see. We're also finding resistance on this blue trend line, which we've gotten rejection off of once, twice, thrice. 14, I don't know. That's actually 14, I think. So that's, we need to see number 4, the 4th rejection on this.
I failed Spanish, so your guess is as good as mine.
I'm Mexican, but I can't speak Spanish that well. So there you go. Don't feel as bad. This is this is the 4th time that it's getting rejected from here. Hopefully we can see that it's extremely overbought on the 4-hourly. It's 100. If we go to the daily, it's it's going to be overbought by the end of today. No question. We can see how much it shot up quickly. And again, it's above the 50 moving average, and it created a gap down here at 424, gap down here between 14.6 and 14.8, and then today opening up 14.9 to roughly about 14.97. So there's a lot of gaps here, a lot of liquidity that's building up. I think a lot of people are kind of going along a bit, thinking that we're going to get the Santa rally. Again, we haven't had confirmation of this break of a higher high, and there is something I do want to show you, because this is on the daily. Let's look at the weekly. And I know a lot of people are saying that we're in a new bull market, right? And that, the Fed's going to start cutting rates next year, and that there's a lot of things lining up that, there's a lot of money that's going to be printed. But this is the NASDAQ in a nutshell when we zoom out, right? This is all the way to 2011 or so, to where we currently are. I want you to remember this chart. Here's Mini-Me from Austin Powers 3, and it's almost identical, the same fractal from what we're seeing now. We got a lower high, and this is the .com bubble right here. So I think a lot of people are underestimating that this is a very, very much a real possibility that we see something like this. And again, fractals aren't necessarily everything, but we get a blow off top, we come down, and then we get a really good bear market rally, which I believe we've seen. And, this would be similar to what we saw in September of 2000. And eventually, look how much it falls off from the top of that move, right? You can see that from the top all the way to the bottom of the market, which is, I fucked up, roughly about 80% from this move to the bottom during the .com bubble. Now, did we have any type of bubbles this year that really, elevated the NASDAQ and in the stock market in a significant way? Absolutely. AI, right? I think that might be the most obvious case of that. But at the same time, the other bubble is that only 7 stocks kind of outperform the entire market, and they lifted up a lot of these indices with them. So that's the dangerous thing right now. And again, I was looking at Apple, which we take a look at Apple right now too. And right before COVID, we could see that Apple was roughly trading about, we'll give it the benefit of the doubt here. It was trading at $58 a share, right? Came all the way down to about $35 a share at the COVID. Is this COVID low? Am I tweaking it here? No, I am tweaking. Okay. So where am I? Am I tweaking? March of 2020, right?
Yeah.
Okay. I don't know what the hell.
What's going on?
Am I? It is March of 2020. What the fuck am I looking at? I'm blind. That's why I
don't know, man.
Dude, I was looking at it.
This lawnmower is living rent free in your head right now. Like
it
you
really
need to lock it up.
I think I got CTE from the vibrations of my house, but this is really bad right here. $82 it was trading back in February 2020, right? $82. It's a lot more than a lot less than what we're currently trading at. It went all the way down to $54, and then we look at this massive rally we got all the way up here. Again, a lot of this is all stimulus, right? They lowered rates, so that just created the perfect conditions for quantitative easing. And now here we are. Is this a bubble from, shooting up this much, that this much money was put into the system, and now rates went up as fast as they possibly could? Possibly, right? It's something that we're going to have to keep an eye on. But I just wanted to look back here and see what the Apple was doing. I pulled this fractal, which is pretty much as a bar pattern from an earlier pattern that we see in the charts. I stole this white one right here from this, and I saw that we got rejection here. I put it on yesterday to see how it's reacting. It got rejected up here, and it's kind of playing out very similarly. We can see that we're going to probably be in the overbought territory for Apple today, regardless of being down 0.76. But that gap, I was calling a gap all day yesterday. I got filled right here, so that's good to see. But the only thing is, there's a lot more gaps below us, and I was really nitpicky last night before the show even, and I just went down and saw how many gaps there are from this massive pump that we had to the upside. I mean, Apple's got 1, 2, 3, 4, 5, 6, 7 that I can find right here that lead us all the way back to the beginning of the bubble back in March of 2020. So it's just something interesting to keep an eye on. I'm not saying that it has to go down there, but if we are in a bit of a bubble and we're just kind of thinking that we're going into a rally, is this time period right now any different than what we saw back in, once I get to it, the early 2000s?
The long flat line.
Yeah, is it any different than what we saw in the early 2000s? A bull market peak, bear market rally, bear market bottom. So that's a really interesting thing that I've been keeping an eye on when I look at TradFi, because if we look at the S&P today, sure, it's making lower highs and lower lows. Did we break this and go a little bit higher than expected? As of right now, no, we're still putting in a lower high. That was something that we talked about. But the dangerous part is, look, gap. We're just stacking gaps on top of each other. And these tend to get filled out. Sure, we could rally up a little bit here, but even if we don't put in if we don't break up here, then obviously we're still in a downward trend. So we're going to keep an eye on that. The one that's really interesting is the Dow. Dow is doing something a little bit different. It did break above the previous high. So we just went just a little bit above it. But once again, this is a death cross rally that we're seeing here. You can see it's extremely overbought on the daily. And the thing that we have to do is zoom out once again and see that, okay, we're finding resistance probably up here, midline of this parallel channel. We're still in this parallel channel, which we have yet to break. We need to break this. That would mean breaking 31,471. We were pretty close. Guys, we were down here at 32,352, which means that we would have broke that. We would have came down and tested that. And if that didn't hold, obviously we'd have to find support somewhere down in this range. That's a pretty big move. And if we look at this week for the Dow, we've shot up a significant amount. We shot up, I think 1,687 points. So that's absolutely insane, 1,687 points. My concern now is how long can this, withstand the price action that it's seen and the way it's gone up? Because again, if we look at this just rationally on the hourly or something like that, this isn't a sustainable, slow build up. This is 100% a V-shaped recovery. I think reacting to that death cross that we are seeing on the daily. So I don't necessarily buy a lot of what's going on here. I think we are going to find some resistance on this mid trend line here. We also have that 34,347 level that's been, key level of resistance for us for the longest time. I didn't think we were going to retest it, but I mean, we're close enough where we could retest it. But we've stacked, a pretty good amount of gaps on this move here. I think that, it's only a matter of time if we get rejected from this. A lot of people are going long here. I think we're going to break above this. We're still in a bull market. I think we're in a very different situation than most people right now are probably anticipating. So I'm not convinced on any of the moves in TradFi. I think we just have to take this with a grain of salt. You can see that the dollar is absolutely dying right now. This is insane how much it's shot down. I think a lot of it comes with the data that we've gotten recently. But again, I think the dollar is one thing. If it does pump, it's probably going to be because of something internationally, globally, where the United States is involved with some type of military action. I mean, guys, that's probably the number one, catalyst for the dollar shooting up to past 107 and 109. It's unfortunate to say that, but even if I look at, 2008, we're going to take a look at 2008 real quick before we move on. And we could see that in 2008, this is roughly May, June, July right now is at the bottom. And then once we got into the financial crisis, look how much the dollar took off. I mean, it went all the way up to 89 compared to where it was back at 71. I mean, if we just take this and go up, that's roughly 25% move to the upside. If we put that on where we are currently, 25% move from where we are. Not
26.
saying that we're bought. 26.
Yeah, so up to 131 basically for USD or for DXY.
Okay, that's where it put us. Yeah, I mean that's an insane situation, right? That's
27. I'm okay at math, so I think that would be a $26 increase on DXY.
Yeah, it's probably easier that we have 105 right now as opposed to 89. So yeah, that's what we're kind of like looking at. I don't think it's going to go up that much, but it's definitely a catalyst where I think if something does happen, a financial crisis, the markets freak out for some reason, they're going to do the flight to safety. It's going to be gold. It's going to be USD. The other reason I do want to show on TradFi real quick, we're up on the weekly for S&P roughly, I think it's 6.01%, so roughly 6%. We're up, 6.61% for the NASDAQ, and on the Dow, we are up 5.17%. Let's just take a look at the U.S. Treasury yields real quick, and this is probably going to be the easiest indicator to see why we're pumping this much. We're down 5.72% on the Treasury yields. So that money's going from one place to another in the market. Just something to keep in mind. I mean, if we pull up the US 2-year, I haven't taken a look at this one, but I wouldn't be surprised if, it's down 3.48%. So a lot of these yields come down. Obviously, that kind of puts some relief on the markets. It's pushing up. The dollar's coming down. I think it was just a perfect catalyst for these markets to pump. Whether they take profit or not, that remains to be seen. Honestly, if I had a 6% week up in the markets and I haven't seen a 4-hourly close in a red, I probably would be taking profits personally, but I don't have any positions on where I would be taking profits right now for TradFi.
All right, House, I know that you are deep into the world of crypto as well. As we begin to wrap up today, have you been, active in the crypto market this week? I know you've been meme coining a little bit, but when talking about, altcoins and Bitcoin, are you still mainly on the sidelines?
Yeah, I'm still mainly on the sidelines. There was a pretty decent move in Solana that I caught a little bit of. I don't really do much with Sol at all, but and people are probably going to watch this video and unsubscribe, but I got convinced by a friend to mint a Solana NFT, and I'm throwing up in the back.
All right, well, folks, it was fun while it lasted. This will be our last show ever.
Yeah, the only reason I did it. The only reason I did it was there was a standing offer of 15 Sol, cost 7 Sol to mint. So I was like, this is the easiest arbitrage in the history of arbitrage. I'm just gonna mint it, sell it immediately. And then in the time when I sold it and then finally converted it or bridged it to ETH, swapped to USD, Sol went from $32 to, I want to say I think I swapped it out at 39, but then it ended up going above $40. So honestly, it was a good experience.
Still nice.
Probably not.
You got free money, man. You can't get mad about that.
It was a free money play. No, but it was good to see the Solana community get a big dub ever since Solana just pretty much tanked from 200, 180 range all the way down to think it hit like $6 or $7. And especially with FTX and SBF having their final day in court pre-sentencing, I think that was definitely a big kind of rallying cry for Solana because of the the evidence that came out that, Caroline said SBF and FTX Alameda, they had the power to shut down Sol so they could get their trades in and then turn it back on. So, getting that sort of centralization outside of what's supposed to be a decentralized environment is cool. Other than that, it seems like everything's kind of trading around Bitcoin and ETH as far as alts go. You can see the impact Bitcoin dominance has had. Everything other than Bitcoin is but reacting pretty sharply to wherever Bitcoin's moving. But other than that, I'm still kind of eyeing the same tokens I've been talking about over the past few months. So looking at Optimism and Arbitrum, there are a lot of big grant funds that are getting distributed, as well as big DAO votes that could impact the price. As far as gaming tokens, there's a token for a game called Big Time that the game is out, it's playable, and I think it's opening in beta soon. It's still in closed beta, but the token was very well received. I think that's holding somewhere between like 15 and 30 cents. Prime by Echelon Prime Foundation. That token's actually holding up pretty solid. It went up to like $3.30. Now it's hovering closer to $2.80. But yeah, I mean, there's some tokens doing well. I'm probably not buying much, but I'm scoping them and seeing if something hits one of my price targets and, just drops enough, I might buy a little bit higher than I would anticipate. Specifically Prime, because I'm just falling in love with the game that the token is used in, and they're releasing some skins, some other transferable content that's only available in Prime, and I'll be damned if those sinks aren't playing Warfare in my mind with me.
All right. It's never a bad idea to buy the things that you enjoy and that you believe in. So I think that's a solid approach to take there, House. Kev, let's wrap it up. Any final things you want to discuss on the crypto front before we call it a day?
Yeah. I mean, I do want to show, I guess we can just talk about it here, but, USDC market cap. And this is, I think, the scariest chart in all of crypto. And there's a very small group of people on Twitter that I think also agree with me. And that's fine. This is something that's really, concerning. It's just been on a, massive bleed since the top of the market back in, not top of the market, but June 2022. So obviously when the market started bleeding out really bad, close to that, I think it was like 17K bottom that we got last year. And we can see that we're still putting in, like, even right now as we speak, the low of this move is right now. Like, it's in real time that it continues to bleed out, right? And then, we compare this with USDT, which is, market cap. The high is right now. The two are, inversely correlated. But this is something that's really interesting to me because I know I'm very, very skeptical, and from what I've seen in the price and everything like that, I don't believe that the assets are valued properly right now. I think that what's backing a lot of things are just, the USDT pairs, whether or not those are, valued at 1-to-1, or if those assets are 1-to-1, that remains to be seen. I don't necessarily think I believe that they are 100%. I think that everything right now is extremely inflated. But the thing that concerns me is what happened with SBF, right? This guy is not going to go to jail for 110 years. He's going to do everything he possibly can to get out of this position, right? Or at least get, some type of internet connection. That's what Michael Lewis said. He'd rather, be in jail with a laptop than be in a prison with tennis courts like Jordan Belfort, but have no internet. So I think this guy is definitely going to, SBF and FTX, they definitely, ratted on each other. They ratted on Sam to get a lenient sentence. Hopefully they're hoping, but I think Sam's also going to, lean on some of that too. And we saw that, head of, I think it was Binance US, I can't remember the exact position, but he was in charge of I can't even remember what it was, but he was defending pretty much SBF and Binance US, saying, that they went after him because he was guilty. He did everything wrong. But it's like, does Sam know something about all these other exchanges? And again, we know that a lot of money USDT was given to Sam, whether it was backed 1-to-1 from when, he got it, still kind of questionable. So I wouldn't be surprised if we do see some plea deal or some information that comes out regarding SBF. Again, that's speculation. It doesn't necessarily have to happen, but I definitely think that with what we saw last night, we saw a lot of Bitcoin move as soon as the verdict came in. we're seeing some of these exchanges. Bitfinex, I think, is really interesting right now. Some of the stuff that's going on with their futures market, it's really insane. But I think everything that's going on in crypto right now revolves around two coins. It's USDT and USDC. I think those are the scariest coins that we could be looking at right now. And I think that Armageddon time isn't too far away. And, I would say it's like a 30% shot that we're going to see some type of depeg among one of the big boys. Is it going to happen? I'm saying 30%. It's unlikely that it's going to happen to the point of, was it UST, Terra Luna's stablecoin? But there's definitely a chance that that something bad among this, especially with the fact that the U.S. government's getting involved. I don't know. I've heard rumors that Coinbase is going to delist Tether in the United States. Whether or not that's true, it's just speculation. People that I trust on Twitter that I think are pretty reputable people that, have some good character. But we have to wait and see how that plays out. I've heard later in the month maybe, but, we've seen already some of the forefront of that in August with Coinbase in Canada. House mentioned Kraken. We've said it a few times in the show. I would keep an eye on stable coins. I think the stable coins are the root problem of everything going on in crypto right now. That's all I will say.
Yeah, that just reminded me of one thing I kind of forgot earlier. So I think we touched on it. It was either August or September. Coinbase and Circle, who's the company behind USDC, they announced a partnership, and it was recently or either brought to light, I don't know when it was announced, that Circle is going to be closing individual consumer accounts. So you'll need to be an entity to withdraw. And I'm wondering if that's part of the causation behind the Tether market cap rising, is people are realizing, okay, I'll need to go directly to Coinbase or, someone who fits that model within KYC exchanges. And some people just don't want a KYC. So whether they are looking at Tether and they're just trying to figure out, what do I do with this? That's one thing I've been looking at, but now I'm kind of on the same boat as you. I think that, sorry for my camera, I think that the stable coins are getting a little bit funky, and it's always just been funny to me that they're called stable coins, because most of them, if you look at the chart, they're never actually pegged to $1. It's always like a slight margin of error that, if there's enough volume and enough liquidity, someone with a large enough bag could really mess with the pool. But that's a topic for another day.
Indeed it is. We are going to wrap it up for the week. Thank you, everybody, for watching. If you have not yet, hit that like button, subscribe to the channel, drop us a comment, share us out on social. All of those things are helpful. We really do appreciate it. We'll be back next week, running it back all over again. We're going to have a little bit more economic data. We're going to have some more earnings reports, maybe a little bit of volatility in the market. Who the hell knows? But we're going to have fun regardless. So thank you for watching. Kev, House, appreciate you. Have a great weekend, everybody, and we will see you on Monday.
Stay safe. Take care.